Yeah. So, you haven't even touched a button yet before, have you? Right? Like, have you never even traded? So, I think for this competition, for you, I think you should just try to focus on learning how to collect data from your trades, right? That's probably your biggest thing, I guess. Like, I would assume. Like, I don't think you're at a point that you can go in here, be profitable, and whatnot, but I think you can. I think your goal should be to, yeah, go in there, learn how to collect good data, like learn how to like write your trades down or what. I actually, in the notes, not notes, files. I'm gonna add you right here. I have my account plan in there that I use when I to track my stuff. So you can just use that as a way to track your trades, right? Just put like, instead of just like say yearly, just do that per trade, right? And then enter in like, it might be a little bit, it's going to be different than, you know, whatever, like you're not going to really care about like a goal per trade, but you can use that to track your trades if you need. That's always something you can do, right? So that's one way to do it. Because that's important. Because I think one thing Shaq's gonna be looking for is how you are tracking everything. Hey, buddy, the dog just walked in. What's up, Jerry? Oh God. But yeah, that's definitely one thing that you're gonna be doing. So, and again, be okay with losing and like not doing well or whatnot, man. Like, you're still early. Like, you might lose trades, you might win trades, man, but like the fact you're doing it, and as long as you do it in a stewarded approach, like say, you know, how, you know, I have my point totals for the week, right? So I say like I want to hit my 50 points in a week, right? You do something like that too, man. Imagine that. You get like your first trade you hit, and you're like, oh man, I just made 50 points on the NASDAQ. If you're trading that, I don't know what you're gonna be trading, right? You know what you're going to be trading? Alright, yeah. Yeah, man, like imagine that. You hit 50 points on your first trade on the NASDAQ, and there we go. Right? And then you're done for the week. And then you can just go next week, another 50 points. Next week, another 50 points. If you, I mean, that, listen, as someone who's been trying to do it, it's not as easy as it sounds. You're like, oh man, 50 points? That's not even that bad, right? That's not even that hard. It's still, you know, like, yeah, if you get a good thing, if you're on side and whatnot, and your model works out, man, 50 points really isn't that bad. Like, you can get that. What's it? Yes. Well, the hardest part really with people coming in is that they don't even have a model. They just say, ah, fuck it, I'm gonna hit, you know, buy here, sell here, whatever, right? They don't have that framework, and that's what we try to teach you guys here, right? We try to cut out the bullshit of it all, and we try to actually teach you what it takes to be successful, right? So you're already, you know, you compare me where I was, you know, you've been doing this for what, like 6 months now, 6-7 months. I don't know how many long. Compare me to you. Yeah. Do it, buddy. So that's what we gotta do. So yeah, I mean, right now you don't really have a model, right? You could try to follow the 22 model, which would be good. Yeah, just do 22, man. Yeah, just stick with 22. If you've been watching the videos and do that, just do the 22 model. Do the best you can, man, and just stick with it. Like, that's the toughest part. You're gonna notice it, right? Because it's easy when you. Damn it, got underneath my bed. My dumbass dog. Anyways, as long as he doesn't chew up anything, we should be good. What's up, Jerry? Yeah, I love Jerry. He's a dumbass though, right, buddy? Yeah. Anyways, oh yeah, but yeah, you just follow the model, Follow your model as much as you can, and you're gonna see when you start trading. It's like, oh man, like, oh, this move looks good, but it's outside your model, and then you don't take it, and the move happens, and you're like, fuck, you're kicking yourself. You're kicking yourself. Like, why didn't I take it? Why did I take it? Like, that was dumb, right? So that's something, you know, that still happens to me sometimes, like, because even without my model, I can still call trades, because obviously your model don't show up in every single time you do that a move happens. I can still call trades that happen, and I don't enter because it's not my model. But the fact is, you're following a structured, rule-based approach. That alone helps you stay focused, because there's a lot of bullshit. You'll see. When you're trying to actually sit here, try to, you know, snipe a trade, it's a lot of bullshit that happens. You need a rule-based approach. So you stick with that, you'll be good. I mean, that alone will help you either A, make money, or B, not lose a lot of money. And especially if you're only using like a specific amount of risk, right? So a tip I have for you is, like, I like using 2%. So you got $250,000 account, right? Let's just find 2% of risk, right? 250,000 times 0.02. So you can only really risk $5,000 per trade, which, yeah. I mean, you're gonna be using minis, not. I mean, you're not using micros. You're using minis. So, no, micros are smaller than minis. Mini is like your baseline contract. Your micro is 1/10 of a mini. So you'll be using minis. So like you'll be using, instead of MNQH, you'll be using NQH, right? So keep that number in mind, right? $5,000. So when you set your stop loss, you know, anything between 5,000 and, you know, 0 or whatever, you can figure out, and then you can, like, all right, maybe there's a fair value gap that I want within my risk, right? Here, I'll just show you. I'll show you, because I try to like when I do my my channel or whatnot, I try to show you guys like what's happening. All right, cool. So I'm just gonna like paper trade whatever. I'll show you. You know, it's not really setting. I'm just gonna. I'll just reset the account. So 250. Exactly. All right. So I'm just gonna fuck it. All right. 250,000. I'm gonna set a sell order. We'll just say 10 units. Since 25, so take 10 units. Here's your stop loss. Here's take profit. Or that's a buy. I guess I forgot to put it to sell. How do I create new order? Sell. Take profit and stop loss. Cool. Alright. And I'm on minis. That's right. NQH. Do the same shit. Alright. Sell 10 units. So you can drag. Oh, you can. So like $5,000, man, you can do a lot of things. So here's $5,000 worth of risk right here. It's 10 contracts, 5,000. That is 25 points. That's a good amount of risk right there. 25 points. And say, all right, I want to be above my risk to be above these highs, but if I say I have like this. You know, I mark these buy side, and you know, maybe this buy side as well. And I think we could sweep up here, but look, that's $9,200 of risk. But I want that. It's how many points is that? You know, it's a good amount, right? That's 45 points. So say you want to enter here and you want that entire range. All right, let's just cut my thing in half. Cut my units in half. What the hell are you doing, buddy? Oh God. Sorry, my dog made a dumbass. Stop. Stay in the bed. Stay on the island. Yeah, here we go. Anyways. So now, you cut it in half. Now you have this entire point risk, 4,600. So you're still within your 2% risk, and you have a lot more to risk. Or if you still want to do 10, figure out another point of entry that allows you to have 10, right? Maybe like something like or somewhere higher if you're selling. Say you're say you're shorting, right? Because this stop loss is pretty, or this sell side is pretty good. You swept high time frame liquidity. Maybe you see something like that. Whatever. So you can play around with it, but just stick with that 2%, man. The fact that you're gonna have like a set risk is also shows you that that's another way that you're gonna be profitable, or at least not like hemorrhage money out of your ass, which is what happens when new traders actually hit the button for the first time, man. They don't know how to control their risk. The fact that you even know what a stop loss is, you have a stated risk per trade. You don't understand how foreign that is to people at your level of knowledge. Like, I didn't know any of that shit when I was at your time of knowledge. Like, that alone is gonna be good. As long as you show us that you had all right, 2% risk, here's risk management. Say you take a loss, right? This is what I'm doing, right? My last trade on my account was a loss. So I did, last week I didn't really I had one trade that I did a video on that was a loss, and I showed you why I lost and everything. So I took a loss last week. So now my next trade I do, I'm only going to take one contract instead of two, because I'm cutting my risk in half. I'm sure you've heard ICT talk about that, right? I've talked about it too. So if you lose, cut your risk in half, right? So you can still make money, right? As long because that's part of risk management. You lose to 10 contracts, cut a half in 5, and then determine a minimum that allows you to still if you have a winning trade that allows you to get back to break even, but you're still not risking the full 10 contracts, because shit happens, man. Sometimes you're not always in the edge. I feel like I'm a little bit off edge right now because these types of markets that we're currently in, not really my thing. I struggle in these types of markets, like these all-time high markets. It's not great for OTE. I'm like that. It's just not good for my strategy. I'm good in choppy markets, right? Where we're just purging buy side, sell side, and we're just going back and forth. I love those markets. People hate those markets. Those are my dream markets. I love it when we have weeks of periods of just choppiness instead of just full bullish or bearish candles, right? I struggle with in those points. So that will be good for you. So just risk management, set good. I'll just do this example again. Whatever. All right, 5,000. All right. So then you can learn how to use partials. So you have 10, and say, all right, you can put your stop loss here. Look, that's a good. It's a good 2-to-1 risk to reward ratio. But say you think it might go. Just do this. I mean, first of all, look at that OTE. Pretty beautiful, huh? But yeah, almost to the dot. I saw that. I remember seeing that. I didn't take it because I just that day Friday was kind of choppy. But say all right, you have the sell side, but you also think you might get down to here, or maybe even down to 17,864. You can learn how to take partials. So you can hit a create new order. Partials, maybe you take half your points off the table. Right? Boom. So you have 5. So you sell half your contracts, half your risk. You take half your profit. So it goes down there. You take a partial. You move your stop loss in profit. There we go. You just made, this in this case, it would be $6,000. Congratulations. You just made money. If it runs back up, oh well. You guaranteed yourself making, is that 50 points? No, I don't think it's 50 points. I think that's 20 points. No, that's 50 points. That's 50 points right there. Congratulations. You just made 50 points. And then if you think it's going to go down more, set another partial. Maybe at the 7-9, I'll set another 3 units. Right? And then I'll leave the rest as runners, and then I have another down here as 2. Yeah, it's called partials. That having a lot of contracts on this account is that's a great way to secure money, man. I'm telling you, if you're like all right, 50 points, all right, I want more than 50 points. Okay, that's fine. That's fine, man. There's some moves that you could cut out at 50 points and end up going another 100. All right, just take partials. Just get the money, all right? Just take the money, and then you can leave the rest as runners, and just as long as you put your stop loss in profit, because in theory, if you're thinking that it's going to be runners, it shouldn't go back up to your basis, right? But if it does, you're covered. You still make money from the rest of your contracts, right? That's another way, but that's a little bit more advanced, but that's another way, because that's more like position management. Position management, I'm telling you, that's like where I'm currently at, man. Position management is a whole nother thing that you got like trade entry, exit, position management, all that stuff, because there's different rules. It's crazy, but that's just an introduction to partials. If you're like into that, whoops, what the hell did I do? Oh, I went to SPX. If that's something you want to do, then you can always do, right? So, what was it in QH? Something you can look at, right? So that's like basic, but I think the biggest thing that's going to help you here is fall 2022 model. Have risk management in play, aka 2% risk. If you lose, cut down your contracts in half and use partials to your advantage, right? Because if you get into a good entry and you see that thing running down to like some sell side, right? Because like I'm looking at this sell side right here. Like, this is probably a target of mine coming next week. Like, I'll go on MNQ right now. Where you at? There he is. Same idea, right? It's a little bit different. I'm looking at this sell side down here as a nice sell side sweep. Like, that's probably a target of mine. Since we swept all-time highs earlier. You know, that might happen overnight, right? Because we swept this high time frame liquidity over here. If I can actually do it, whatever. Anyways, you know what I'm talking about. See, look at boom. We swept that buy side. I think we're gonna go from we go from buy side to buy side, or buy side to sell side liquidity. Boom. Go down into order block, sweep the sell side, or go down to OTE of this leg up. That I would love that. Oh, I love that. If I can get that, beautiful. But anyways, like that's but then it'll be up to your analysis. I'll be you'll see my stuff. I'll be active in my channel, but don't look at mine. Like try to do what you want to do, right? Like this is up to you to like do your own analysis and cut down the chart and figure shit out, right? But using that, how you're going to be profitable, or at least don't hemorrhage money is what I've just talked to you about. Again, if you come out here at the end of the month actively trading and you make money, you should be proud of that, honestly. You should that is something to be extremely proud of. If you came out at the end of the month actively trading and making money, that is huge. That's something to be proud of. I mean, that's a goal you can set. Like that would be a goal. Like hell, like if you're actively trading and you end the month off above even $1 of 250,000. If you end up $251,000 and you took 10 trades during that month and you ended $1,000 above your starting point, that's a win. That's a win, man. Even if you end up $1,000 below, if you 249,000, that's also a win, man. Because that means break. I'm gonna tell you this. People like being a break-even trader is a win at your level of expertise. That's a win. That's like being a break-even trader. That is huge. Because being a profitable trader, I mean, you see the statistics, like 1 out of every 100 or some bullshit like that. People who are day traders are profitable. Like most people don't make money, so being able to walk out of the market and be a break-even trader shows that you have proper risk management. You understand what the market is doing. Obviously, you still have things to work out, but you still had what you needed to be done. So that's I guess that would be your goal. But again, if you start losing money, don't honestly. If you start feeling the emotions, that's another thing. I think one thing you really should if you're doing this, right? When you're doing this, you gotta really sit down. You want to feel these emotions because this is not real money. You want to feel your emotions. Write down how you feel during the trades, man. Like that's important because it's like if you're feeling figure out the one thing that that one. So my problem is my struggles with emotions are my ones that I deal with the most are ego and doubt. Like I'm either too egotistical or I doubt myself too much. I don't even take a trade, and then I just take a bullshit trade that is like, what am I doing? Like I'm literally like, sometimes you lose money by taking trades that you don't need to, right? You like, sometimes like, being scared makes you lose money instead of putting risk on a table on a good idea and waiting, quote unquote, waiting for a better trade, even though your model just materialized and you were doubted yourself, and then you end up just taking some bullshit trade and you lose money. Sometimes you get scared of losing money, you end up losing money. That's something you'll find out. It sounds bullshit. It sounds like, oh yeah, you get so scared of losing money that you end up losing money. It's contradictive. Exactly. It's exactly what it is. It's still, I mean, it still happens to me, man. I'm not, like I said, I'm not perfect by any means, man. I still got so much more growth to do. Right? I have a model, I have everything like I need to get done, but again, I'm still not, nobody's perfect in this business. Like Track still has struggles, I still have my struggles. Like I try to be as transparent as possible with you guys. Like you guys know exactly what I'm going through any day of the week, man. Right? Because I want to show you how it is, how it actually, all these people on Instagram, like, oh, I made $150 today. Oh, I'm feeling great, or whatever. You know, you see them on Instagram, man. It's some bullshit. I laugh at these posts, man, because you know it's whatever. It's just how it is. So yeah, when you're trading, man, make sure you know how you're feeling, and because that's probably gonna be the most important thing that you get out of this is being able to sit back and view how you felt during this month. Write down the emotions that you felt, and then realize how you can improve yourself through those emotions. Like if you were doubtful, then how can you get rid of that doubt? If you were greedy, how can you get rid of that greed? Right? Everyone struggles with a different sin or whatever the hell it is. Right? That's something you gotta figure out, man. Just write it down. What, 3% in a month? 3% in a month. All right. Do the math. Pull up a calculator right now. Do the math. Take 250% and multiply it by 1.03. Point one, no, or 1.03, so 3%. So that be your 3% goal for the week or the month, I should say. $250,000. Yeah, it's $257,500. So you're trying to make $7,500 in a month. Is it? Well, okay. That is so. We'll break it down. Okay, well, explain it to you. What are you feeling right now? All right. Well, it depends how many contracts. Here, I'll show you. Are you looking at my screen right now? All right. Anything over 2% of your risk. So say you want, so like how I trade, I have a 20-point stop loss, right? So 20 points, whatever that may be. Well, okay. So over leveraging is related to the amount of contracts that you take. So stop losses, you need to have a sufficient stop loss that is you're able to risk enough that covers you from just the regular price swings in the market. Like, you see some idiots with funded accounts trading 2 fucking mini contracts on their $3,000 accounts, and they have like a 5-point stop loss in the NASDAQ. What the hell is that 5-point stop loss gonna do? They're gonna, unless they're literally getting pinpoint trades, they're gonna get wiped out. Because, dude, I mean, you'll see. You're gonna go into fucking red in every single trade. Like, you're gonna have drawdown every single trade you take, right? So your stop loss needs to have an efficient range that allows you to cover points that you want within your risk, but it doesn't give you too much risk that you end up losing unnecessary money, right? So, like, maybe you have like a fucking like a 60-point stop loss, and we get like a price leg that goes against you for 60 points, and you get like railed for no reason, which you could have had a 20-point stop loss that covered you. That, you know, you have your stop loss at a point that, yeah, like, your stop loss is at a point that if price hits that point, you want to get out of that trade because your logic is invalidated. But you want your stop loss to be able to be above or below typical price swings, right? Because you're not going to get pinpoint moves. Yeah. So, like, that's why I say 20 points are good. Yeah, easy, realistic. Yeah, so that's why I say 20 points. But say you want 30 points, I told you, you can just, yeah, for stop loss. I like 20 points. But again, you have a big account. I have a small little, I am trading $5,700, man. I don't have a lot of fucking lever. I can trade 2 contracts, and that's about it, man. And, like, I don't have a lot. I mean, you're trading. I'm doing all right. Yeah, I'm not doing bad. I mean, I start off the account. I was down. Well, I was down 10% in the first 2 weeks, and I dragged my ass out of drawdown, and now I'm back at break even, right? Though my live data costs are fucking me right now because my account was so low. But, you know, I'm not doing bad. Right, I mean, I started off my account in the beginning. You know, I was taking some bullshit trades that were completely out of my strategy, and I literally lost 10% of my account because I did it. I was doing shit like that. I was taking overnight trades that had no reason to be taken, and that's why I got killed. So, but then I started doing like a good structured approach to everything, and then that's what got me back into it. So yeah, I think I can't really tell you what to do because everyone's different, man. Like, some people take 20 points, some people take 15 points, some people take 25 points, man. Some people want 60, 70 points. I only take it 50 because 50 points is enough for me to make 3% in a week easy, right? Like, here, I'll show you. 10 points of his first stop loss? Yeah, a little bit too little. 10 points is too little. I would say, I mean, 20 is a good starting point, man. Honestly, I would stick with 20 for now. Just, I like, right now, as you're like, you don't really have your models, or like, you don't even decide who the hell you are as a trader yet. Like, this is what's gonna happen. Like, I play reversals, man. I've always been a reversal trader, so my model is OTE. I take reversal trades, right, during a trend down. I wait for the price legs to go back up into OTE and reverse. That's how I do it. So you'll figure out who you are once you start doing this. But to answer your question, I know we're getting close to where you need to go. If you're looking at my stream right now, so say you're trading 10 contracts and you have a $5,000 risk, right? And that's like, it's 25 points of drawdown, right? That you could take. That's a good. A point is is it 20 or 25? I think it's 20. Here, let me see. I'm pretty sure it's 20. Yes, it is 20. It is 20 bucks. $20 for 1 point. So, like I've said, like, you can have 10 contracts and have a 25-point stop loss, and that's between your 2% risk, right? That's pretty good. So then you said you need $27,500. You need $7,500 to get your 3% goal. With $10 by the time, I mean 10 contracts. 10 contracts with a $25 stop loss. which is 2% of your total account, you're aiming for just about 37.5 points. That's all you need to make 3%. That's all you need. You need 37 points to make 3% of your account, risking 10 contracts. That's it. You need 37 points, 37.5 points. That is easy to get. Yep. That's all you gotta do, man. Yeah. Yeah. I mean, if you're on trend and you hit a sell side, depends where you're at. I mean, if you look at the trade that I'm looking at right now, maybe you say that, oh, I want this top fair value gap, the CE of this top fair value gap, because most of the time, you know, from the data that I've collected, if there's two fair value gaps back to back, usually you see the top fair value gap. All right, I'm gonna put it at a CE of this point, and you have the sell side. Right? You could expect we go from inefficiency to a sell side. All right, that's almost 9,700 points. That's almost 50 points right there, right? So you could expect 50 points pretty easily, man. Like that's what we're saying. You can make 3% in a week. That's what I mean. 50 points, man. You can do a lot of things with 50 points. That's why we try to say this high frequency trading, man. You can, if you have one good trade. If your first trade of the week is a win and you end up getting that to, you know, you have your 10 contracts and you get 50 points, well, you stop trading for the week. You're done. You're done. Congratulations. You don't have to look at the chart for the rest of the week. You literally made $7,500 on your $250,000 paper account. Congratulations. You're done for the week. Go back next week. Watch the charts. See what you can do. That's it. Congratulations. You just made 3%. Now you can make 3% of 257,500. So, all right, now we're gonna do point times 1.03 of 257,500. That's 225,225, right? So it's just compounding. That's how it is, man. That's all we try to teach is this high frequency stuff, right? That's what we try to do with you guys. And it's I just showed you how attainable that is, man. That's all you need, and that's what we try to do. 50 points is all you need in a week. And then once you get better, up at the 60. Once you get better, up at the 70. Congratulations. You just realized how sustainable trading can make you a shitload of money. You don't need these big ass price swings, man. You don't need that. You don't need to capture, 200 points like these fuckers say that you see it all the time. Oh, I just made $10,000 in a single trade. Yeah, but you probably lost, $7,000 trying to trade that up to that point. So now you're only $3,000. I just made, I made $5,000 each week this month, and now I'm up a good amount of money. Or that's what we try to trade. It's all percentages. You don't really care about dollar amounts at this point. It's all about percentages and then just compounding and everything. But now you just realize that alone, wow, that's crazy. That alone will help you pass this challenge. That's it. That's all you need. You need one good trade a week. One move a week. That's all you need. And that's what I try to get. Depends. Sure. And you have 10 contracts? I'm telling you, man, 10 contracts, your first trade with a $250,000 account, you're giving yourself a 25-point stop loss that is exactly at your 2% risk limit, right? Because you're not risking more than 2%. If you think that 2% is a good amount of risk, which I think 2% is a good risk, some people might say maybe you only want 1.5% risk. Then just lower your contracts or your stop loss limit. You still want to trade 10 contracts, lower it down to 20 points instead of 25. Congratulations, you just adjusted your risk, right? So you still want to do 10 contracts? That's up to you, man. Mess around with it, see what you want to do, figure out how much you want to risk, and yeah, that's it. And then I just showed you how to make that shit. That's all I'm telling you, man. That's what we try to teach you guys. That alone, oh god, I wish I had this when I was beginning, man. That's all you need, and that's all I try to do during the week, man. Oh yeah, all it is, man. And then you do that every week. Sure. Yep. Or lower, depending on like the stop loss. I would say, like, you know, I always go for 20 points of a stop loss, and then like say if there's still things that like, oh, even my stop loss gets hit, then the trade still might be good because there's like this fair value gap or a propulsion block or whatever that's still within my. It's above my stop loss. All right, how can I adjust it? Maybe I'll go one contract, double my stop loss, or try to figure out an area that move my sell limit up or whatnot. But that is gonna be on your own. I can't teach that. That's up to you, man. Whatever is within your model, man. But that's what you need, man. It's all you need. So you figure that out. That's all you need. For sure. Like, this is a good example. This sell side right here. I'm like, this is a perfect trade. I mean, it may or may not happen. We'll see. It may. Like, this sell side right here. I'm looking at that. I'm like, all right. You know, we went back up to. We failed. There's a prop lock right here. It's a prop lock. I can go on, or I'll just go on MLupe because I have it marked out. All right, whatever. We had this prop lock. I wanted to take a trade right here, or at the mean threshold. I wanted it up here because I wanted my risk between here. So I had it like literally like this. I had a trade like, and just ignore the 10, whatever. I had my trade like this, right? Because it's usually 40 points, and then my total was, I think. I wanted this sell stop right here. That's what I wanted. I didn't get it. So I could assume that since we rejected this, but we did create relative even highs, we could go back up here, hit this 705, and then head back down. But this is a low-hanging fruit, whatever. Don't ignore that, whatever. This is your low-hanging fruit. You're looking at that. If you see a go back up here, that's your low-hanging fruit. That's an obvious sell stop, right? Look at that. Like, that's just a fucking, that's so obvious. That's your low-hanging fruit. There we go. That's a low-hanging fruit. All right, but say maybe you want to go long for some reason. You think there's a buy side. Here's your low-hanging fruit up here. Or hell, right here too is your low-hanging fruit. That's your buy side. I'm going to get rid of this. I don't need that anymore. But yeah, that's your low-hanging fruit right there. Say you sweep sell side. You're playing a sell side to buy side. There we go. There's 80 points right there. That's your low-hanging fruit right there. You'll see. Just obvious targets. Obvious targets that are easy to get to within your range. If you're correct. If your bias is correct and your entry is correct. The first target. Sorry. There you go. So, what you do, you go and hit this little plus sign right over here, right? And then you either get, you can either hit sell or buy. So say I'm going to hit sell. I can easily move it around like this, right? Easy. It's just changing where my orders are at. If you want to modify the order, hover over like the 10 or the amount of contracts you have and you click it. This little screen comes on. If you want to adjust your units, there we go. Your units are right here. Boom. If you want to adjust it to sell or a buy, all you do is click this thing at the top when you're creating an order. And then you have your TP and your SL. Drag your stop loss out. Boom. Drag your take profit out. Boom. And there we go. That's how you have now you formed your matrix. And that's it. No. So, yeah. Let me see. I think it 4 days. Trade from March 1st to March 31st. So it's the March. So the month of March. Yeah, it just starts in March. Yeah, play around with it. Honestly, I would say this. It's not cheating, whatever. Like, you're not, like, taking a trade or anything like that. Like, you can always reset the account. I say tomorrow, just hit buy or sell at any point and just watch. Just watch price move and just get used to how the profit moves and the price moves, because it's different. Because you're looking at price, you're like, oh, this is obvious. Like, all right, I short at, this point. But then once you have a point of entry, like right here, like this is the line that it shows or whatever, right? And you see it. It's different once you actually have an order in the marketplace. I'd say that tomorrow. Just do that tomorrow. It's not cheating. It's actually preparing yourself, man. Like, do that. Just get used to it. So when you go in there on March 1st and you're ready to get into this whatnot, you're ready to you understand how it all moves and everything. So just do that. Just hit buy or sell and just watch it. Doesn't fucking matter if it's a mall or anything. Just hit buy or sell and just see it. And you'll see that you can win off a coin flip too. I could just hit fucking buy or sell at any point, right? And then I can. It's a 50, not really 50-50 chance, but I can hit buy or sell. It's a coin flip, yeah. You could hit a coin flip. All right, I'm gonna flip a coin and I'm gonna hit. Just do that. Hell, just fucking do that tomorrow when the market opens. Flip a coin. Decide if heads is buy, tails is sell, and then whatever it lands on, just hit that button at whatever point and see what happens. Whatever, and just look at how price books and how your order is reacted to or whatever. It doesn't matter. Just look at it and just understand how it is. That's what you're gonna do tomorrow. That'll just make it easier for you, and so then you can get used to like stop losses, like set a stop loss and see like if price hits a stop loss or the take profit. And like understand how it does and how you feel and everything like that. Do that. Just prepare yourself. That'll be helpful for you. Yeah, 50 points in a day, easy, man. Like, look at this leg down right here. It's 100 points. You can only need half of that. This leg up from here, that OTE leg up back to that was 100 points, man. All you need is 50 points. I'm telling you, man, it's a reasonable range. Hell, even these little shitty ass things, it's 50 points. Yeah. Yeah. So. Yeah. Well, macros are a good point to. Yeah, I would figure it out. Like, I mean, macros are a good point to have like an entry or an exit. Like, dude, you sweep liquidity or go rebalance a. All right, this would have been, like I said, this trade right here would have been good, right? It's the end of the 1150 to 1210 macro, and we go back and rebalance up into this propulsion block, and then obviously we get a move out of it, right? That's a good entry right there. Or if you're long, that's a good exit, because you logged off the OTE and you see that we're back up into this propulsion block within a macro. You're up a good amount of points, so use macros for your advantage. But again, it's gonna be a lot because you're gonna be like, oh, I got too many things, and you look at that price, and you're gonna be looking at time, like, oh my god. But yeah, it'll be a lot in the beginning. But the macros are a good point to look at. Just remember the macros. If you're below or above sell side or buy side liquidity within a macro, man, and you're in a trade or you're looking to take a trade, I'm like, all right, that's a good point to be looking at it, right? But you'll see. But other than that, that's all like you to figure out. Again, I spent 3 months only looking at macros. Literally, I can probably pull back and look at my trade, my channel, see like the date that I said I'm literally just gonna. I spent 3 months exclusively looking at macros and how price reacted within macros. That's all I did. I mean, that was when I was learning ICT concepts. I didn't press a single button, man. I was just looking at it, just looking how they did it, and studied and studied and studied. And now, like, I have a good idea of what macros are. But you'll see it, man. So it's also been 45 minutes. I know you said you had to go. You'll see. Just 2%. That should. If I have like a trade during the week and we can review it. But in this case, I'll just go over that quickly. Just back at this chart right here, right? You have this leg down. This is a significant price leg after sweeping buy side, right? It's almost 200 points, so that's a significant leg. Draw your matrix out. You find equilibrium, so any point below this would be a good place to long, especially looking at this 1 hour fair value gap. That was a good place. Look at how price is respecting the CE of that 1 hour fair value gap. So you see that. And then above here, if you're looking to short, you're looking to short above the 0.5. So you see price in this propulsion block above the 0.5. That's in premium of this leg, of this relative premium of this leg down, right? So you see this. I mean, this is also another order block right here. I don't know what happened. There's a lot of order blocks. Yep. So like that's another thing that you can do. All right. You can look at that and like look at arrays above in premium. If you're looking to short, you don't want to short down here. Like, you don't want to short at these fair value gaps. That's in discount. Obviously, if you short it right here at this fair value gap or this fair value gap or this order block right here, you got railed. But then you go above here and you're looking at arrays above in premium, and that's a good idea. And you can see that these are reactive, and then now we're rolling back down into discount, right? So you're looking to short above in premium. And you're and if you're yeah, you want to see price react to it. Where would you draw the discount premium? All right, here, I'll just get rid of this. I'll just get rid of it, and I'll show you. Yeah, it's all it is a fib. It's a fib. So I'm looking at this. You're looking for significant price legs, not some pussy ass shit, right? This is like this little thing right here. Like yeah, I guess you could. Like this doesn't mean anything. Like I said, this is a 200-point leg after sweeping some sort of sell side or buy side, right? This is a significant point of it's just a significant point, whatever. Yeah, reference, significant point of interest. So you take the top of this leg, and the bottom of the leg, and boom, and you just drag it out, right? And there we go. There's your 0.5. And then anything below is discount. Anything above is premium. That's what you want to do. You gotta look for significant legs, not some pussy shit. Because if you look at the 1 minute, like this is a 5 minute, but like you could tell, like this is a majority of the AM session here, right? But if you look at the 1 minute and you see these little pussy ass legs, man, like you get railed more times than not looking at little 1 minute pussy legs. So just look for significant legs and take trades based off of significant. Yeah, so just that's what I do, and that's why sometimes I don't get filled all the time, man. Because I look at OTE and I don't always get like I said, I didn't get filled here because it's a significant leg, and you know I don't get filled every time I play OTE. So, but when I do, I sometimes get some fucking bangers, right? Because if I'm correct, and I hit OTE of a high time frame leg, man, you get something like this fucking candle right here, right? That's pretty good. So you'll see. But that I can't answer for you. Like, that's gonna be up to you. Or just another thing, like this big leg up here. If I'm looking to longer term, I'm looking below here. I'm looking at the 705, and this large ass 1 hour fair value gap with the CE and the 705 being right next to each other. So I'm looking at this and be like, all right, this would be good, a good long entry to get back up or whatever. You know, you'll see. You'll see. Yeah. It can, yeah. Using a -1, -2. Yeah, that's its deviations. Yeah, don't worry about it. It's a little bit more advanced. Yeah, like, alright, here's a weekly. Like, oh, you take this leg up right here, right? Here's a, there's a little daily leg right here, down, right? And then we go back up, and then you can see that, alright, I want to hit this too, and we did. That would have been our price target, whatever. Don't worry about that, yeah, that's some advanced shit. People are crazy, man. Nerds, man. You, dude, follow the nerds. That's my motto, man. Copy what the nerds do, because there's nothing more than what nerds like than attention. Nerds love attention, so they'll do anything for attention, including put all their life's work out on the internet for attention, man. Follow the nerds, man. So years and years of data collection. Yeah, I mean, that's like the basis of my entire OTE strategy, man. Like, I mean, OTE is within, it's like the most expensive of the disc, or the most expensive or the cheapest part of like a leg, right? That I'm willing to take risk at, right? Because, like, you know, this OTE 705, that's in like deeper premium, right? But I've identified a point in which that there's a raise here that I would see that it would be respected. But anything above this OTE, then like, all right, we're seeing new highs, right? But that's the idea of the OTE. So I'm always shorting or longing in relative discount or premium. I don't like, you know, like I said, I know some fuckers saw this fair value gap, right? It was like, oh yeah, let's short us fair value gap, and they got absolutely ass blown, right? Yeah, exactly. So that's the idea. But again, you're gonna start layering all those concepts on top of each other, and it's gonna be tough, man. Just stick with what you know and don't overcomplicate things. So the moment, because that's what happens too. I used to overcomplicate things all the time, man. I just like, I would just mess myself up. It's called analysis paralysis. It's a fun word to say. You do too much analysis and you don't know. I still happens to me, man. Sometimes, and you just do too much analysis. You overcomplicate things, and you're like, oh god, but it could go here, it could go there, and you're all flustered and shit. And then the idea of like, oh, I don't want to lose money, but then you end up taking a stupid trade, and then you lose money because you're scared of losing money. And that's how it works, man. So again, this will be good for you guys, for all the trainees. Oh yeah. Yeah, you got a whole month in. You can finally actually do something with all this data that you've collected and everything, all the work that you've done. You can actually start pressing buttons and seeing what you know, man. And if you do good, then hell yeah, man, that's good. If you don't do good, then that doesn't matter, man. You got great data. You got great data, and you didn't lose a single penny. Great, beautiful. Yeah. So. Win-win, man. Yeah. So like, I guess in 22. So like, yeah, in this case, well, because you're expecting. All right, so we're looking at this, right? I don't have. So you have like that, a market structure shift right here. Right? Here's your market structure shift. Where you at? There it is. All right, you got your market structure shift. You have this fair value gap formed, and then now you're looking to enter in on this fair value gap, right? Because you're expecting that you have like a buy or sell side down here, right? So you're not front running. It's more like an IO Fed, right? Because you're trying to get in a good entry to participate in the leg down, right? So you're looking at the sell side, and boom, there it is. All right, cool. And then eventually you get it, or maybe you want to go see this fair value gap, but you get this opportunity to enter in at this fair value gap. So that would be your 2022 model. In this case, you know, I mean, price was strong. You need to give it opportunity. I mean, hell, even up here would have been a good entry, but that's a little scary, right? But that would have been, that's the best entry of the day. Or if you get like in this case, yep, yeah, low market structure shift. You take the 1 minute inverted fair value gap. Take a short off of that, and that's your best play of the day right there, right? So that's your idea of the 2022 model. So yes, you are shorting or buying in expensive or cheap areas, right? But you're expecting that you saw that market structure shift, and it's your typical like, oh, wait for reassurance, or like they say like, oh yeah, wait for the retracement back into it or whatever. Like that's pretty much what 2022 model is. ICT fanboys will say that like, oh, it's not, that's some bullshit. Wait, only retail waits for retracement, but my 2022 model, that's so much different. No, it isn't. It's the same shit. You wait for a market structure shift, and you wait for price to go back up to a fair value gap that's formed. You're retracing back up into a point that should hold as resistance, and then you see the price fall. Right? It's the same shit. Every ICT fanboys try to like go crazy and try to make their concepts different than what retail is. It's the same shit, but just a different lens. It's what's actually on the chart instead of like stupid fucking indicators. Right? But it's the same idea. But that's what it is, man. Yeah. Hey, no problem. I need to do that. This was good for me too, man. I need to do this. It's good. Yeah, no, it's good for me, man. Cause it reassures me. Like 50 points, all you need, man. Like that was me telling myself that too. So, yeah. No, I won't be. I'll be at home, working from home in the morning, but I got a doctor's appointment. I'll be at the office all night for the rest of the night, and then I'm going rock climbing. So I won't be back, like, I'll be busy tomorrow. Yeah, tomorrow's a pretty busy day for me. Tuesday, possibly. But yeah, if you end up doing it, just put it in your channel. Yeah. It's up to you, man. Do whatever you want. Like, document it, and you know, if you have emotion or what you see, just put that in there and do what you need. So, do you want me to post this video on YouTube, or do you think you got enough? All right. All right. This is a whole hour-long video. Hell yeah. So that was good, man. I hope you feel more prepared for this.